Welcome to the latest in our Decision Heroes video series. We're profiling thought leaders on a variety of topics. Today, we're joined by Darryl Knopp, Team Director of Portfolio Marketing at FICO. In today's session, he outlines industry trends, rapidly changing consumer expectations, and emerging best practice in winning and retaining customers. Darryl, thanks for joining us today.
Oh, thanks so much. Delighted to be here.
So with so much disruption to the industries, increasing competition from fintechs, so-called neobanks and the niche players, what must a well-established bank do to stay relevant? They've got legacy technology to wrestle with, they've got siloed thinking and so on, plus the pressures of retaining market share.
There's a lot of things that spring to mind, and of course I've given this some thought, but three kind of key ones for me, and I would say prioritization, adoption, and partnership. And let me break that down. So prioritization for me is you've got to ask yourself and understand what your client's needs are, and who is that client? Is it everyone? Because servicing everyone is incredibly difficult and incredibly expensive. So it's understanding who your target customer is and be laser focused on that target customer. Give you an example, which would be, do you need every product you offer to be in the mobile app, given your customers' usage? I have an opinion on that, but that's the type of question you want to ask. The other is if you're a digital-only financial institution, what level of automation do you want, and where do you actually want to put people, call centers, and other things? Do you want to have those? Do you want 100% automation? Which, are you prepared to say no, right? We don't always see a great willingness for financial institutions, especially large ones, to say no. And no, that's not my customer, so I'm not going to service them this way. It's difficult, and there's regulatory scare and all of those other sorts of things. But let me jump forward into adoption. Adoption, decide what type of IT philosophy you want to have, right? Build versus buy is the traditional decision you're making there. And I have an incredibly strong opinion on this one, which is really, I believe banks should become laser focused on being the best integrators of software, not builders, right? It's extremely difficult for a financial institution to become a massive software company, right? Why would you want to do that? Your strategic advantages and how you manage those clients, that customer base, that data, those analytics. I don't believe that a bank should be trying to make software their strategic advantage. I think it really needs to be the integration of that software. And then lastly, and this flows right out of the comments I've just made on adoption, are on that philosophy, which is really partnership. So if I'm not going to be a software builder, I've got to partner with the best and brightest fintechs and other software companies, so that I've got that modern set of tools and opportunities.
Right, yeah, that's a really good answer. So, go back to the data, takes on to open banking really, and really other similar opt-in data sharing initiatives, which obviously continues to drive change in the way banks operate, notably with financial marketplaces, hyper-personalization, and really acutely tailored offers. What can you tell us about this area?
I mean, we spend hours on this one, and open banking and banking data aggregation is a real passion of mine, and anyone wants to talk about it for days, or anyone wants to get me worked up, say something incorrect about it, and I'll spend all day on it. But I'm going to talk about kind of three key opportunities here, and first, or three key observations here. First, what is it, right? And so, open banking is refers to the regulation for the most part of that we have in the UK, and we have it in Australia and other markets. And it's really this centralized repository that stores transaction data and bank account data across all of the banks. Almost think of it as a bureau for core account data or traditional account data and portfolio data that you would have in financial services. I'm going to expand the definition. I mean, all of that data. So even if it's unregulated like if we have here in the US or in Canada, and if we open that definition, we refer to it as bank data aggregation. That makes the US probably the most mature market in the world associated with it, because it's been around almost 20 years. And I bring that up because the opportunities within open banking are similar to the opportunities within the bank aggregation. And we're seeing all kinds of impact, a very positive impact that data can have. So the key uses here are probably fraud prevention, both first and third party fraud, as well as credit risk assessment. Those would be at the top of my list. Let me give you an example that kind of talks about all three of those. The act of linking this data, allowing the bank to access it and linking it, the act of doing it actually you got to use your username and password from that other financial institution, and that financial institution delivers back your name, your address, your date of birth, pieces of information along with that transaction data. So now the fact that you have access to that shows that you're very likely that person. So it's a great tool in the arsenal from a third-party fraud prevention. Also, the act of doing it is a level of seriousness associated with that with that work. So that actually helps with first-party fraud prevention, because now they're going to be able to see in there. You're also going to be able to observe things like income and rent, which are things that you might want to verify, also helping prevent first-party fraud, but also just making a much better experience. I don't have to have a customer upload pay stubs, or in this case, upload a lease that shows what your rent amount is, because those are things that you want to verify, and they're hard to verify through the traditional credit bureau means. The other, of course, is all of this data that comes along with this makes a significantly enhanced analytic experience for those that are building models on this. So I can start to understand a lot more what Darryl can afford. I can understand what Darryl's spending his money on. I can incorporate this data into models where I can start to understand what I should be marketing to Darryl, right? This is the hyper-personalization, a little bit of what we're talking about. The piece for me that really gets me excited is that, as we start to link all of this data together, you can get down to this idea of marketing to the one, right? And so this is data enrichment among this is fascinating, and we're at the tip of the iceberg on this one.
Yeah, marketing to the one. Oh, that's a fantastic phrase, Darryl. So can you tell us what else is coming up over the horizon for banks and how they can win and retain a competitive advantage from here on?
Yeah, I mean, there's a lot going on in financial services. I mean, I think the largest financial institutions in the world are making billions and billions of dollars of investments in digital transformation, with mixed results. And the issue really here historically has been business culture, which is has been product driven versus customer driven, and then legacy systems. And I would also put in that business culture that if I need to risk my career to make these sorts of changes, I might be hesitant to do that. And so really from the CEO down, you really have to create that culture of change, how you're going to do it, how important it is, and get that culture, that change culture, flourishing. The other here is you've really, not to, I'm going to put a stake in the ground, which is really banks got to adapt a cloud-based platform with the view that servicing the customer, not the product, you want to service them there. And what do I mean by that? The value of the right platform and tools is that they solve problems across the entire customer lifecycle. Right? It's not that they're solving one. This is not this one thing I'm going to do. For the most part, if you're just going to use these platforms for solving one problem, you're probably overpaying. Now, heaven forbid I should say that, but the value really is that these are decision platforms, and every type of decision that you can think of can be made there. Decisions require data and intelligence, and then deployment of that. And so there's all kinds of use cases. It's not just at the customer facing level, there's mid office and back office opportunities as well. And then I'll dig into this phrase, these three words that I love to use. You've got to be agile, fast, and resilient. That's what modern businesses need to be, and banks are no different than that. And so these tools allow that. So when I think about agile, I can change the rule sets and models and workflows easily. Right? It's not that I have to wait for some specific window of opportunity with an IT that happens every 3 months. These can be easily changed, and you don't need IT people for it. It's a combination of almost, it's the business people is where the rules and the change abilities are. In some cases, there might be more complex changes that would require some coordination, but for the most part, we're really talking about simple changes within rules. Fast. fast, I probably don't need to describe what the word fast is, but changes can be made and completed as they come up in hours and days, not weeks, months, right? I use the example of a financial institution I talked to about a year and a half ago. It takes them from beginning to end, from the time they are looking at a new model, thinking about a new analytic model, to the time they deploy it, is 18 months. And that's an ungodly amount of time in the modern world that we're in. And I know that, and I've been at a fintech where from beginning to end, it would be maybe weeks. In fact, for the most part, depending on the type of change we're talking about hours. That's the competitive world that we're in. And the last one here is resilient. Resilient, you got to be fast and agile to be resilient, but you also need to know what to do. And really what that is that's learning. So how do I learn? How do I learn in the financial world? How do I learn in any world around data and analytics and making decisions? Well, I have to test. I have to be able to simulate, understand what I might want to test, and then I can put tests in, controlled tests, so that they're small but large enough to learn from. This is whether it's a 5% sample or 10, whatever that number needs to be. And you have to be able to do that. And when you can do it small like that, you can fail fast and fail cheap, which I think is the old Google phrase. But it's incredibly important to have a platform and tools that allow that learning, that enable that learning. And then a culture that accepts the fact that you're going to fail fast and fail cheap, and make sure it's cheap. And so the competitive advantage for banks, as I've said, is it's data and trust, right? And so you've got to continue to learn from that data, and you got to continue to enhance that brand. But that trust, that competitive advantage they've had is waning, and so you've got to continue to kind of have this approach of agile, fast, and resilient.
Yeah, so that was fantastic. Thank you very much, Darryl. That's a great summary, and thank you very much for joining us today. So it's been a fascinating recording. If anyone would like to find out more, simply go to the FICO community page. In the meantime, please look out for more Decision Hero sessions. Thank you again for joining us today.
Thanks, Tom.